Hi, this is Mark Middlebrooks, back with another quick video. Today I'm going to talk about a way for buyers or borrowers purchasing homes to come up with some additional money for either down payment or maybe buying down their mortgage insurance, potentially covering some of their own closing costs to make sure that they don't need to ask for seller concessions on a purchase, or just increasing their comfort level of what they're left with in their reserve account after they put down the down payment they have. What I'm going to talk about is borrowing from a 401k or 403b. Now, this is something that most people are aware that they can do, but sometimes they either don't ask the questions or maybe they get misinformed by some water cooler talk about the way that this is structured. Oftentimes when you cash out a 401k, there's going to be some pretty substantial hits or fees that you're going to pay in order to cash that out. And oftentimes when you're borrowing from a 401k or 403b, you're paying that back at an interest rate that functions in an amortized fashion, so it functions kind of more of as like an auto loan or something like that. And that payment is actually going back into your account in most cases. So you're paying that interest back to yourself. And I think that some people don't realize that that is the general structure that usually surrounds a loan from a 401k or 403b. So this can be a really good way for people to get their hands on some extra money short term, go ahead and pay it back into that tax advantage retirement fund that they started with, and really just set them off on a good foot to get out there to purchase a home. Now, one other thing that could be an advantage of borrowing from a 401k or 403b is the repayment of that on conventional lending actually does not count against your debt to income ratio either. So when people are borrowing from their 401k or 403b, they're making that payment back to themselves. That could also potentially increase their purchasing power. If they're kind of on the verge of where they're looking for a property that costs X, they might be able to get into a house that costs X plus another 10 grand. So these are some really good questions for our clientele to be asking. Doesn't necessarily mean it's a good fit. In many cases, maybe it's not a good fit. Maybe if somebody just feels uncomfortable borrowing money from their 401k and it doesn't help them sleep at night because they know that they owe themselves some money in a different fashion, then maybe it's not a good fit for them. Or maybe their particular 401k or 403b is set up in a different way. However, the reason why I'm shooting this video and the reason why I'm bringing this to people's attention is because these are good questions to ask. This is not the end-all be-all, this is how it's structured. These are just really good questions to ask to find out if it's a good fit for your clientele to maybe put themselves in a better position out there in today's market. So I hope you found this information helpful, and I will see you soon.